Hello traders, welcome to the Next Well Trading Hub YouTube channel. We're going to continue with the series on the daily profile for the power of 3 from the open, high, low and close of the daily range candle. If you haven't watched the first episode, the link to that is in the description section of this video. This is GBP USD and this is the daily time frame. So we want to establish our bias from the daily time frame, and then we drop to the lower time frame to look at how we can take our entries based on the explanation I've given to you guys in the previous episode, because we are looking at the formation of the daily candle profile, the range, and how to expect your entry during the opening session of the Asian, London and the New York session. So we can see here we have the bearish movement of price to the downside in GBP USD, and what we can see is that the market took out this buy side liquidity and closed above the buy side liquidity. Now we can see the pullback, price return to the downside to fill up this inefficiency. Now what we can see, we have the bullish push of price to the upside. Price took out this high point, and we can see that this daily candle closed above the high here. The body of the candle closed above the high and also above the high of the previous daily candle. So you have to identify the next draw on liquidity. When you're looking at this here, we have this internal range liquidity, which is the fair value gap. So this becomes our next draw on liquidity. Since we're in a bearish move, so once we see the push of price into the zone, we'll begin to frame a bearish continuation to the downside. I'll be looking forward to see that the market will take out this low point, which is our sell side liquidity. So we can establish more confidence by making use of the FIB tool. You can see from this high to the low point, you can see that we have our internal range liquidity, which is this fair value gap within the premium price zone. We can see price is mitigating the equilibrium. So we should expect more dip of price to the upside into the internal range liquidity, which is this fair value gap. And this is our draw on liquidity. So want to see the mitigation of this fair value gap and price closing below the mean threshold of the fair value gap. So you can see we've established our bias, our expectation. So now we're going to go to the lower time frame to begin to frame our entries based on the model I've explained in the previous episode. So you can do well to watch the previous episode so that you can have a better understanding to this perspective. The link to that is in the description section to this video. So let's play price to see from the daily time frame to see the push of price into this zone and to see how the candle close. Then we can begin to expect the bearish movement of price to take out the sell side liquidity. Now we can see how price returned into the fair value gap, mitigated the fair value gap and closed below the mean threshold of the fair value gap and also below the fair value gap zone. So we can see price took out the liquidity of the previous daily candle and also closed below the high of the previous day. So if you've watched the video on how to establish daily bias, then you should know our expectation. Our next expectation is to see the further bearish movement of price to the downside to take out this daily candle low points. So you can see that we waited for the creation of this bearish candle so that we can properly frame the bearish expectation. So now we're going to drop to the 1 hour time frame so that we can identify our zone where we are expecting the next day to give us a pullback and mitigate a sponsorship zone, and then we have the bearish fall of price to the downside. So let's go to the 1 hour time frame. This is the 1 hour time frame, so we can see how price mitigated the zone we identified from the daily time frame. Price mitigated the fair value gap and we can see the fall of price to the downside. What we can identify from the 1 hour time frame, we have this market structure shift, and we can identify the buy side liquidity to the upside here. So our expectation now is to see the pullback of price to the upside to take out the internal liquidity, which is the buy side liquidity, and then we have the further bearish movement of price to the downside. So we need to identify the sponsorship candle that's give us the market structure shift. And what we can see here, we have our order block resting here, and we can see the fair value gap also. So we are expecting to see the push of price to the upside, and then we have the bearish continuation to the downside, since we can identify market structure shifts after the mitigation of the higher time frame zone. So what we must understand is we're going to be making use of the 5 minutes to frame our entries. And you must understand that we are making use of the New York time zone. So guys, let's drop to the 5 minute time frame so that we can begin to frame our expectation based on the knowledge I've explained in the previous episode. We must understand that since we're in a bearish market condition, we'll be looking forward to see the accumulation during the Asian session, and then we see the London session create the high of the day, and then we anticipate our entry when the London session is creating the high of the day, or we look forward to take entry in the New York session. So guys, let's check the 5 minutes time frame. Here we are guys in the 5 minute time frame, and what we can see is this is the sell side liquidity we've identified from the daily time frame, which is the overall target we're looking forward to see that the market will fall to. And here we have the higher time frame zone we identify also from the daily time frame. We can see how price mitigated that, and we have the displacement of price to the downside. So I've separated this into sessions already. We have the Asian session, the London session, and we have the New York session. So based on the delivery we've also identified from the 1 hour time frame, you can see the displacement to the downside. The market gave us the market structure shifts. Now we've identified this buy side liquidity from the 1 hour time frame. So we're looking forward to see that the market will trade above this buy side liquidity to mitigate the 1 hour sponsorship zone, the order block we identify. So in the 1 hour time frame, we identify this as the order block. In the 5 minute time frame, what we can see is that we have, this is the up close candle before the bearish movement of price to the downside. So we've identified another order block within the 1 hour zone, which you can also see we have the daily zone also. So you can see this is a strong confluence because we have the displacement to the downside that gave us the market structure shift. So let's do away with this zone so that we can have a clear chart.